Hello student, welcome in Rishikul Vidyapeeth online classes. My name is ONKAR TYAGI. Today I discuss 11th Accountancy Chapter 1 Module 2, some basic concept of accounting. So in basic concept I take first concept, that is bookkeeping. Bookkeeping. What do you mean by bookkeeping? It is the primary stage of accounting, and this work is done by the junior clerk generally. Here we identify the transaction and we record these transactions in a proper book in a systematic way. So that called bookkeeping. It is a clerical work. Generally junior staff, or just you can say no special knowledge required for the bookkeeping. Only you can say it is not analytical, it is just understanding. And in bookkeeping we record all transactions in a systematic way, and we keep all accounts in a proper way in bookkeeping. And in bookkeeping, first identify the transaction, then recording, then classifying. These things we studied in earlier module. And for example, identify पहचान करना, recording सही तरीके से लिखना, उसको यानी रिकॉर्ड करना, classifying in systematic way we maintain the ledger and all account in a proper way at proper place, that called classifying. So these are the three works in bookkeeping. So it is the primary stage of the accounting. Next one is bookkeeping के अलावा, that is accounting. Second one is accounting. What is accounting? Second, accounting. In accounting, there is a need of analytical knowledge or special knowledge. You can, how you prepare the accounts after bookkeeping, where bookkeeping ends, then accounting start. And in accounting, it is an art, and here we summarize the financial transaction, and then we interpret the result, and that result will be communicated here. Three works: summarizing, you can say trial balance, then interpretation of result. You can say that is how you find out the profit and loss. Then communicating the result. Communicating the result means to provide the information to the various party, either internal user or external user. So here required the special skill of accounting, special knowledge of accounting, and it is generally done by the senior staff, and you can say knowledge of accounting will be there. So, and third concept, that is accountancy. What do you mean by accountancy? Accountancy. In accountancy, that is the third, accountancy. It is similar word accounting, but accountancy is the body of knowledge. Here we study bookkeeping and accounting, and it is based some rule and regulation, some principles, and it is just a book of accountancy, and all thing bookkeeping and accounting is there in accounting. It is a body of knowledge that called accountancy, or you can say that is a just you can say stream, or you can say accounting by body of knowledge. Here we study bookkeeping and accounting both. So this is the accountancy. Now I come to the next topic, that is types of accounting. Or subfield of accounting. Types of accounting. Types of accounting. First one is that is financial accounting. Financial accounting. What do you mean by financial accounting? If we have a business and we invest the money in the business, after a year we are earning or we are losing, we can calculate with the help of financial accounting, and we record all transaction in a systematic way and find out the result means net profit, net loss. That called financial accounting. Or financial transaction. Transaction means events, or you can say which are measured in terms of money and financial nature, give and take. That called transaction. They are recorded in a systematic way and find out the result. Result means profit and loss. So it has a procedure. First, identify the transaction, then make the journal entry or other subfield of accounting, then ledger, then trial balance, then financial statement. So with the help of these accounting cycle we studied in earlier module, that called financial accounting. So financial accounting is the base in accounting. So without financial accounting we can't do any other things because it is a original data, and here we record the original data. Second one is that is cost accounting. Number 2, that is cost accounting. Cost accounting. What do you mean by cost accounting? Cost accounting means here we take the information from financial accounting and prepare a cost sheet and find out the per unit cost or total cost of the product. So we can set the price of the product with the help of cost. Without cost, how we set the price? So we have to know what is the exact cost of that product which we produce in our industry, in our business. So find out the per unit cost, per unit cost, per unit cost, or find out the total cost, total cost. And what is the fixed cost and variable cost? All costs are studied in cost accounting, and it is helpful in decision making for the management time to time. So cost accounting is necessary. Some business they just have the cost audit also even. Next one, third one is that is management accounting. What do you mean by management accounting? Management accounting. Third, management accounting. You know management? Management. What is management? The manager, a person who take the work from other, that called manager. And in management we do some activity like managing activity, planning, organizing, staffing, directing and controlling. And manager have to take the decision time to time, what to do and what not to do. How they take the decision without accounting. In accounting we have the information. If a manager want to expand the business, they want to know what is our status. Can we expand or not expand? Sometimes we have to just you can say take the decision of increment to the staff or any other. So many decisions the manager have to take time to time. Some machinery we want to purchase, some plant we want to establish a new plant. So with the help of information which are given by the financial accounting, and the manager prepare some reports, valuable reports, and then they take the decision. So the manager have to take the decision time to time, yes or no. We have no. So execute, not execute. So without information, without proper accounting, the manager can't take the decision. The manager takes the decision with the help of the reports, and these reports are prepared with the help of accounting. So in accounting, the management accounting is the branch, and we have to take the decision time to time. Decision making, you can say it is decision making. Without information we can't take any decision. If we have the proper record, proper data, proper information, then we can take the proper decision. So this is the management accounting. Next, fourth, that is tax accounting. Fourth number, that is tax accounting. What do you mean by tax accounting? Fourth, that is tax accounting. You know, in our business, two type of tax, direct or indirect. Direct tax or indirect tax. Indirect tax. And indirect tax known as, in modern scenario, that is GST. GST. That is income tax. If we want just compliance with the taxation, or you can say we want to pay the tax, either is it direct or indirect, or we want to calculate the GST also. Without information we can't calculate the GST. Without information we can't calculate the income tax. So if we want to fulfill these compliances and fulfill these legal compliances, so we have to go in accounting and tax accounting. For that purpose we prepare the accounts, and tax authority just they can accept our accounts, and we can calculate, we can compute our income tax as well as GST time to time, and we can fill our return also with the help of accounting. So that called tax accounting, and it is the part. Next one and last, that is responsibility accounting. Fifth point, that is responsibility accounting. What do you mean by responsibility accounting? Responsibility accounting. Responsibility accounting. In responsibility accounting, here a business has the responsibility to serve the society. The society provides so many resources to the business houses, and our responsibility are creating, and just we have to fulfill our social responsibility, and we have to expend some money on to fulfill these society through social activity. For example, some business houses, they open the dispensaries, hospitals, school, college for society, and some business houses just they don't you can say increase the prices to serve the society. They don't interpret the supply of the product to serve the society. They charge the fair prices, they maintain the supply. Even in accounting, if we have the three project A, project B and project C, and we calculate the different accounting, and which account, which project having the profit and which project having the loss, they are responsible for that. We can fix the responsibility. In responsibility we do the accounting and fix the responsibility, and time to time we can take the proper decision and tell them you are responsible for that. It is responsibility accounting. We fix the responsibility. Project A, project B, project C, which are responsible for that. So these are the some basic field, basic types of accounting. Now, source of information. Accounting is the source of information. This concept is right. Accounting is the source of information. Accounting is the source of information. I want to take example. In our business, how many supplier? Anybody can give the answer without accounting? No. How many customer? What we have to pay? What we have to receive? In our business, what is our position, financial position? What is our total expenditure? Direct expenditure, indirect expenditure. What is our total sale, total purchase, total income? Or how much amount we expend on telephone expenses, how much we expend on the salary and wages. Without accounting, no information will be provided, and accounting is the only and only authentic source of information. They provide the best information to everyone, either is an internal user or external user. Next point is parties interested. Next Next, we expand this parties interested in accounting information. Two type of party: internal and external. I discussed earlier also. Internal means within the organization, external outside the organization. Internal, you can say that is the manager, that is the owner of the business. They are the internal. And external, here supplier, customer, potential investor, bank, or you can say tax authority, government, media, researcher. So many are there, that is external. So everyone, they want to know about financial statement of our business, our accounting information. So they are the user, either it is internal or external. I want to repeat it again. Within the organization, that is internal; outside the organization, that is external. So these are the interested parties in accounting information. So I think you like it. Thank you. Have a nice day.